Hey guys, thank you so much for clicking on this video. If you haven't done so already, make sure to hit that subscribe button so you don't miss out on any of the great videos I put out each and every week. So in this video, we will be discussing airline stocks with a focus on the big four airlines, which are Delta, United, American, and Southwest Airlines. The focus of this video will be to answer the question of, should you buy shares of airline stocks right now? Simple, right? Well, sort of. I made a video a couple of days ago discussing cruise line stocks, and I stressed in that video that individuals purchasing shares of cruise line stocks should look at their investment as a long-term one. This is because all travel-related stocks have been hit hard by the coronavirus pandemic, and they will most likely continue to be affected for quite a while. In my opinion, most likely a year. However, I wanted to make this video specifically addressing airline stocks because I believe there are some things that make airline stocks even riskier than cruise line stocks, and I want to explain the differences to you so that you can make the most informed investment decision possible. My goal with this video is not to fearmonger or convince you not to purchase shares of airline companies. However, it is important as an investor to clearly understand the risk associated with buying stocks such as airline stocks right now, and to also understand what your investing strategy is. So this video will be split into two different parts. The first part, which I am about to discuss, will focus on airline stocks as a long-term investment. And the second part will be geared towards investors planning on purchasing airline stocks as a short-term investment. So, are you buying airline stocks as a short-term investment or a long-term investment? That is the main question you need to answer for yourself, and hopefully this video will help you answer it. And I would say short-term is anything less than a year. If it is a short-term investment, the question becomes what type of price increase can you expect and how quickly can you expect to achieve that price increase? These are very difficult questions to answer, but I will do my best to explain in this video what we might expect over the next year. On the other hand, if you are buying airline stocks as a long-term investment, you need to ask the question of, is this an outstanding business or a mediocre business? Or in other words, is this a company that is capable of consistently growing revenue and profit margin for many years to come? And this is the hardest part of buying and selling individual stocks because over the short term, mediocre businesses can outperform outstanding businesses. But over the long term, I'm talking 10, 20, 30 plus years into the future, outstanding businesses always win. So for me as a long-term investor, I try to look 30 years or more into the future if I can when deciding on whether or not to buy a stock such as airline stocks. Also, I mention this all the time, but you need to always be aware of the opportunity cost involved with choosing to buy airline stocks over other stocks right now. There are many stocks of high-quality businesses that have rebounded nicely from their lows and look set to go even higher over the next couple of months and even over the next year. Now, I do not currently own airline stocks because for me, airline stocks are not an appealing long-term investment when compared to other investment opportunities out there right now. However, I know a lot of people watching this video buy and sell stocks on a short-term basis. So I will do my best in this video to address whether you should buy airline stocks as a short-term investment. To answer that question, I will be doing a fundamental analysis of each of the four major airline stocks later in the video, so make sure you watch all the way to the end so you don't miss that. But first, let me explain why I think airlines are mediocre businesses and not good long-term investments. If you have paid attention to stock market news over the last week or so, you may have noticed articles reporting that legendary investor Warren Buffett recently sold off all of his shares in airline companies. At the beginning of the year, Buffett had nearly a 10% stake in each of the big four airline companies. Now he owns none of them. So why did he dump all of his airline stocks? Well, over the years, before he bought airline stocks, Buffett frequently described them as capital-intensive commodity businesses that were not good long-term investments. And I could go more into the reasons why Buffett changed his mind and ended up buying airline stocks, but I don't want to get too distracted in this video. The main reason I bring up Buffett's comments is because I think he is right about airline stocks being capital-intensive commodity businesses, and I want to talk about the implications of that. So let's unpack what exactly that means. Capital intensive simply means that it requires a lot of money to run the business. For airlines specifically, what that means is that as demand grows, the airlines must purchase more airplanes. And what people don't realize is that airplanes have to be maintained whether or not they are actually flying. Now, I have unique insight into this because I work as a maintenance engineer for a business jet manufacturer here in Kansas, and my job is to analyze the systems of the airplanes we make and develop recommendations for the maintenance intervals. And the maintenance intervals can be either based on flight hours or months, regardless of whether or not the plane has been flown. Now, obviously, maintenance costs will be higher if the plane is being flown a lot, but just because a plane has not been flown for a while doesn't mean you can fire up the engines and immediately take off right away. Also, maintenance costs are higher on airplanes when compared to other forms of transportation because the consequences of failure are usually much worse. Namely, that an airplane could fall out of the sky and kill everyone on board if something serious enough were to malfunction. For this reason, there are many more safety components on airplanes that need to be regularly checked and maintained on a consistent basis, which adds to the costs. Over the past 20 years, there have been a number of things maintenance engineers such as myself have done to reduce maintenance costs, but maintenance will always be a fixed cost regardless of how good your maintenance practices are. So I think you guys get the point here. The more demand means more airplanes are needed to meet that demand, which means more fixed operating costs are incurred. In fact, just out of curiosity, let's compare the net profit margin for the airlines to that of cruise ships. For the airline industry, the net profit margin has been falling in recent years, from around 5% in 2017 to 3.4% in 2018, and down even further to 3.1% in 2019. Compare that to a 17% net profit margin for large cruise lines such as Carnival, which is 300 to 500% higher than for airlines. But lower profit margins for airlines are not only tied to fixed costs, but also to lack of pricing power. And this is where I want to discuss why airline stocks are considered commodities by Warren Buffett and why that is a bad thing. A commodity is a good or a service that's wide availability leads to a smaller profit margin over time. A commodity is most easily identifiable by the fact that consumers focus more on the price of the good or service instead of who is selling it. For example, take gasoline in your car. If there are two gas stations right next to each other and one has gas for $4 a gallon and the other has gas for $2 a gallon, you will most likely pick the cheaper option because gas is gas. Now, there may be other factors that come into play, such as the quality of the food inside of the gas station or the cleanliness of the restrooms. But if you were only interested in filling up and driving away, then you would choose the cheapest price gas for your car. The same applies to airlines. People don't typically fly unless they have to. Or put another way, you usually don't fly in an airplane for the experience of flying in an airplane. Now sure, there are people that pay extra to fly first class or to have certain in-flight extras, but the point of getting on an airplane is to get from point A to point B. Therefore, if one airplane can do it for $200 cheaper than another can, you are more likely to pick the cheaper airline. This has led airlines to do some shady stuff to be more competitive, such as showing you a ridiculously low price to get you hooked and then nickel and diming you for everything from picking your seat to extra baggage fees. The problem for capital-intensive commodity businesses is twofold. When times are good and demand is high, airlines will be forced to buy more airplanes, which have a fixed cost attached to them. If demand suddenly falls, the airlines will still be faced with the fixed costs of paying for and maintaining their airplanes with a decreased amount of revenue coming in. Also, over time, if there's a large gap between the demand for the airlines and the capacity of the airlines, smaller companies will be incentivized to grow their operations to fill the gap. This increased competition will subsequently lower profits for everyone since price is the main factor. And larger airlines will have no choice but to lower their prices to remain competitive with the smaller airlines. This means that it is very hard for airline companies to consistently grow their profit margins over time because there will always be downward pressure on the profit margins from competitors. Also, if a company gets caught in an extended period of high capital investment and low profit margins, then any individual airline could easily go bankrupt. In fact, a quick Wikipedia search shows a very long list of airline stocks that have declared for Chapter 11 bankruptcy in the US over the past 40 years. Two of the airlines on that list are United Airlines and Delta, who were able to successfully come back from bankruptcy and are still operational today. As you can see, it's a tough business to be in. One of the reasons I would consider cruise line stocks a reasonable long-term investment instead of airline stocks is because cruise stocks are not commodities. There are way more differences between cruise ship companies that allow them to build up brand loyalty. But one of the biggest differences between airline and cruise companies is that people actually want to go on cruises. On the other hand, I've never heard anyone talk about how excited they were to get on an airplane and experience the joys of flying in an airplane. This means that cruise ships can easily differentiate themselves from their competitors by creating different experiences for different groups of customers. Whereas the only thing airlines can really do is try and make the flying experience more enjoyable. However, doing so would force them to either raise prices or lower their profit margin, which are both bad things. Now that I've made my case for why I don't believe airline stocks are good long-term investments, let's focus on what I think about their short-term prospects. I posted a video on Sunday specifically addressing cruise stocks, and one of the comments on that video intrigued me. The comment came from a YouTuber named Monroe, and he said, "Airlines are the better depressed stock play. They are too big to fail in the eyes of the USA." And that really got me thinking. If I had to pick one or the other to buy and hold for the next 12 months, which one would I choose? For me, this is actually a pretty easy one to answer. While I agree with the YouTuber named Monroe that airlines are too big to fail, I disagree with him in that I don't believe any particular airline is too big to fail. As history has shown us, there are plenty of individual airline companies that have gone bankrupt due to hard times and mismanagement, and I don't think anyone will be upset if Delta or United or any of the other airlines go bankrupt, because they will most likely just be acquired by another airline, or a smaller airline will expand to fill the gap. So yes, 30 years down the road, airlines will still exist. But will the airline companies we have today still exist? That's the hard part, and that's where we don't really know. Next, I want to focus on how quickly we can expect demand to recover to pre-pandemic levels. As I mentioned in my previous video, researchers have already found 14 mutations of the virus, and one of them is even more contagious than the original virus from Wuhan, China. So it is very possible that as we loosen travel restrictions, we see a surge in coronavirus cases. And in my opinion, flying in an airplane is much more risky than getting on a cruise ship. And I'm not saying getting on a cruise ship is a good idea right now, but when compared to getting on an airplane, it seems a little safer. At least on a cruise ship, you can quarantine yourself in your room if anything goes wrong. But in an airplane, you are literally shoulder to shoulder with people in a tiny metal tube for a couple of hours. Also, I think cruise ships got kind of a bad rap from all the negative news early on in the pandemic. For one, you're on a cruise ship for a lot longer than you are on a plane. So if there's an outbreak on a cruise ship, everyone is going to know about it and no one will be allowed off. Whereas on an airplane, you could easily spread it to a bunch of people around you, but no one will know because by the time anyone shows symptoms, everyone has already gotten off of the plane. Also, I just mentioned this a second ago, but I'll mention it again. People actually want to go on cruises right now. In fact, there are numerous articles showing an increase in demand for cruises for the end of 2020 and even into 2021. And a report by UBS found that 76% of people who had their cruise canceled in 2020 opted to get credit towards a future cruise in 2021 rather than get a refund. Therefore, as a short-term investment, I believe cruise stocks are superior to airlines because I think, and we are already seeing it, that the demand for cruises will increase quicker than it will for airlines. If you watched all the way to the end of this video and are still convinced you would like to purchase airline stocks, I will go ahead and give you my recommendations on which ones I think are the best. So let's take a look at the fundamentals for each of the 4 major airlines and see if we can spot one that stands out. I will be using Fidelity's free research tools, which are available to anyone with a Fidelity account. So sign up for a Fidelity account if you want to get access to these research tools that I'm showing you. You can see here in the fundamental analysis section that there are 4 areas which are covered, which are the valuation, quality, growth stability, and financial health metrics. So let's get all 4 of these put on the screen so we can see them all at once and compare them. Over the short term, the 2 metrics we want to focus on are the valuation and the financial health metrics. The more undervalued the stock, the higher the potential return. And for the financial health, the higher the number, the lower the risk of bankruptcy in the short term. For the valuation metric, it looks like United is the most undervalued right now, followed by Delta. American, on the other hand, is considered by Fidelity to be overvalued still. For the financial health, we can see Delta scores the highest, followed by Southwest, United, and then American Airlines. Based on these numbers, it appears that buying shares in Delta, Southwest, or United are not a bad idea. While investors should probably avoid American Airlines if we base our decision just off the fundamental analysis. So I hope this video was helpful to you. If it was, please consider subscribing to this channel. I don't put out videos every day, but the videos I do put out, I put a ton of time and effort into them in order to give you the most accurate video possible. So thanks for watching, and I'll see you guys in the next one.